Okay, what's good, everybody? Mo Kama's Sunday service. Today we're going to do a little bit different format, but the main news today is the U.S. was downgraded by Moody's, which is essentially like a credit rating firm. It'd be like if Equifax and all of them told you that your credit score was going from a 700 down to like a 650 or whatnot, but for a country, right? So this week I don't really have any broad stock market stuff, so we're gonna kind of get straight into the weekly stock picks. And the reason why I bring up this news is because that might affect some particular sectors, and or like I might want to wait Monday or Tuesday at least until towards the end of the day to figure out like how investors are going to react to this US downgrade that happened late Friday afternoon. So I just want to make sure that all the selling is over with before I decide to start swing trading, right? So I'm Omar Reed. I am an attorney who swing trades in my spare time, and I go over every week some of my stock picks with some of my friends. And for this week coming up, just a disclaimer: this for informational purposes only. Stock trading, investing, selling, buying options is risky. I am not a financial professional. Refer all of your trades to your financial professionals if you choose to do so, and do your own research because you can lose money investing in stocks and or trading them, right? So how do I build my watch list? Specifically for this week, I go to a website called koifin.com to specifically look at the sectors, right? I am a trend follower, so I like to get into names specifically for my swing trades that are usually anywhere from 2 days to 3 to 4 weeks on average, right? So that's what I mean by swing trading. I don't typically day trade or scalp. So I'm just looking at more of a 30-day trend, right? So I go to Koifin and type in the what's happened in the last month in specific sectors that I tend to trade. And I'm looking for the strongest trends, but a pullback on the strongest trends. So right now, some of the strongest trends are SMH, the semis, XLK, which is tech, XLY, which is consumer, what is that? Consumer discretionary, and XLI, which is the industrials. We got XLC, the communications, metals and mining, and financials, right? We have a lot of sectors that are up ever since it was announced that there was this 90-day pause with the Chinese and U.S. tariffs against one another's and ongoing negotiations, where it looked like some of the trade tensions have eased, and I feel like it's getting the economy flowing again because there's some more certainty around how much people are going to have to pay to get things into the country, right? So specifically, this next week, I'm looking at four sectors in addition to some other names, but I tend to like to focus on the strongest places where I would say the entire sector is going up, right? So this is where I start though as Koifin to kind of look at what's doing well, and then also what am I avoiding next week. The things that I'd probably be avoiding are gold miners and gold, because we are risk on again. People are now investing into tech because that's hot again. Now the stuff that is the safety stuff like gold, you're seeing that's down 8% over the last month. Healthcare down 3.3% over the last month. And consumer staples, not down, but not up tremendously. It looks mostly flat over the last 3 months because, or not 3 months, but over the last 30 days because we are in a risk on environment post China US negotiations. So all of the safety stuff is down and all of the riskier stuff is up again, right? And that, if you looked at from May, that's kind of been the trend for this month, in terms of where everyone is starting to put their cash again, right? So I would stay away from these bottom sectors. Conversely, or short them. But if everything's going up, I tend to be on the upside of the market rather than on the short side. So even the worst names, I'm probably still not going to short. I'm going to focus on the strength and pullbacks in some of the names. And then this credit downgrade might actually get us the pullback that I might need to take one of these strong sectors to the upside. So that's what I'm going to be looking for on Monday and Tuesday of next week. Specifically, if we're looking at the sectors, look at the strength in SMH, which is why it is probably number one on my list, specifically NVIDIA and TSM, because there's more liquidity in those options, at least for me and how I trade. If I'm trading this to the upside on a pullback, then I'm either going to be buying calls or I'm going to be selling put spreads on NVIDIA or TSM. But looking at the strength, looks really good for next week. You got some other names that look good too: AVGO, ASML, AMAT, kind of, sort of, right? But for me, I'm looking for actual liquidity and options. SMH itself too, the entire ETF, which is probably a safer move because it's all of these stocks combined. But those are probably the names that I'm going to be looking at on a pullback. So SMH, NVIDIA, and TSM are the strongest, not necessarily in that order. NVIDIA is probably the strongest, then TSM behind it, and then SMH would be next in terms of my order, in my opinion, right? But these are names that I'm looking for pullbacks on next week to trade to the upside with some options. The next sector, XLK, you could also include QQQ in there. The weighting is a little bit different of some of the names, but they're mostly going to be the same. XLK looks good. It's starting to trend more positively. So if there is a significant pullback sometime next week, that is when I am going to get in. What do I mean by a significant pullback? I use a tool called daily price movement ranges that I bought from Simpler Trading, which is kind of like an exhaustion tool. You could use average true ranges. If you don't know what that is, go look it up. You could use Bollinger Bands, and essentially whenever you see something like this that is trading or trending upward, breaking new highs, and then it comes back significantly past like a statistical mean, that's when I am trying to hop in, and then hoping that the trend is going to continue after the pullback, right? So for XLK looks good for next week. Microsoft has been looking good the last couple of weeks. We already talked about NVIDIA, that is also there. We already talked about ABGO, that's also there. Palantir looks good, but the options are really expensive from when I looked earlier. I might look again early next week. Maybe they become less expensive when the stock pulls back. And then Oracle as well looks pretty strong. Even IBM, right? I didn't find too much liquidity in IBM, but if you're trading stock, like IBM looks really good, looks decently strong. ServiceNow, which is really expensive, it's $1,000 a share, which means the options are extremely expensive too, right? So my specific names that I'm looking for are going to be XLK itself, the ETF, QQQ itself, another ETF, Microsoft, and Oracle. On pullbacks, I'm not saying go out and buy these names on Monday when the market's open. I'm saying when one of these names has a substantial pullback, that is typically my trigger to enter the trade, right? Next sector, and this is probably my favorite sector of next week because XLI is the industrial sector is not sexy. Like no one wants to tell someone that I traded GE, right? and in the news talking about GE isn't sexy. Talking about Nvidia is sexy. Talking about Microsoft or Apple or Tesla is sexy, but you don't hear much about XLI. But what I like, look at the new highs that it's making. It's trending, right? The entire sector. I would trade XLI itself, but I looked at the options, and the way that I trade, the options aren't very liquid, or the spread is too far apart, which makes them a little bit this makes this a little too risky for me, because this would be a difficult trade to exit with options without the liquidity that I need. But Look at GE. GE has been trending up, breaking new highs. Look at all of these up candles over the last like 2 to 3 weeks. GE, I would love on a pullback. I would love Uber on a pullback as well, right? So those are my two picks for XLI next week for a swing trade. On pullbacks would be a GE and Uber, right? And what I would do in terms of functionally is I go look at these every day in the morning at about 6:30 PST because I'm on the West Coast, so the market opens at 6:30 my time. I might get up and be in front of my computer. I usually wait 10 to 15 minutes to figure out what the morning shakeout's going to look like. And then if I get a pullback substantially into a zone where I find some decent volume or a dry up in volume, right? And it's exhausted, maybe using an RSI tool or slow stochastics on like a 5 minute time frame. And if it's exhausted there, that's probably when I am going to hop into a trade and swing it for a few days or a few weeks, depending on what I'm trading. If I'm trading spreads or if I'm selling spreads, then I'm probably going to have a shorter time frame for my trade because I'm pretty much just eating time decay. So I might only go a week out or 2 weeks out in terms of my expiration date on my options because I'm selling premium. And time decay accumulates faster the closer you are to expiration. If I am buying calls on, let's say, a GE or Uber on a pullback, then I might buy some calls with a further expiration date, like maybe the third Friday of June, because time decay isn't going to hurt as much the further out that I am on my expiration date. And if I'm right, I got a lot of a time window for my trade to run if I'm buying calls, or conversely, if I'm shorting something and if I'm selling puts, right? Last sector, but I'm kind of wary of because of the Moody's news. And I think the Moody's credit rating downgrade is going to affect the financial sector a little bit more than other sectors because it might become more expensive for them to borrow. It might compress their margins because it's more expensive for them to borrow money, right? That's the only sector that I feel like might uh, be relatively effective, but it's trending. And so I like the banks and how they're trending. I actually like the banks itself more than the ETF, the sector. I would look at JP Morgan next week, Bank of America next week, Wells Fargo next week. Shoot, even Citi, which I didn't put on my list, but even that looks good. And I've traded that before. The options are usually decently liquid and not too expensive. Visa looks really good. MasterCard looks really good, right? I might wait a little bit longer to Monday or Tuesday to see how the credit rating downgrade really affects them. But in terms of these trends, these are some really strong trends in these names post China negotiations in the financial sector as well, right? So that's what I'm looking at next week. JP Morgan, Bank of America, Wells Fargo, Visa, MasterCard, but maybe have a tighter stop on these names due to the credit downgrading risk, etc. Right? So those are my swing trades for this week. Shorter class today. That's kind of what I think when I don't have some major topic or whatnot to introduce. I'm just going to show you guys what I'm looking at next week and why, and some of the things that I'm going to be looking at on Monday or Tuesday or Wednesday to place alerts on for some pullbacks for ideally a trend continuation back up to the upside after the stock breathes a little bit, right? That's generally my strategy right now. Candidly, I'm looking for maybe like a secondary strategy or a tertiary one that involves maybe like an iron condor type of strategy of like what to do when the market is flat. Also, another completely different strategy than the one that I'm using, just from some of the traders that I've been listening to on a podcast called Chat with Traders, is that I want to find like 2 or 3 strategies that aren't correlated with each other at all, that just don't connect. They have completely different thesis behind them. So I'm looking for something else that works decently well, like my trend pullback strategy that I learned from one of the traders at Simpler Trading for a class that I've been taking over the last year or so. Right. So that's what I'm looking at next week. I don't know, Isaac. Do you want to look at anything specific? A specific name you're looking at?
Nah, you kind of gave me some new ones I want to look at, so I'm just gonna be looking at the banks like how you did right now. But what are like some of the numbers you're looking for them to dip down to?
See, for me, it depends every day. So, like, if I were to like, other than, let me show you. Let me stop the share my. Bam. The heck, tripping. So if let's say J.P. Morgan, look at the chart. I'm gonna pull up my. Oh, it's already here on my trading screen. So let's say if I'm looking at J.P. Morgan next week, I have something because I got tired of calculating the true range every single time or every single morning on a stock, and that gets a little like I could do it, but like yeah, it takes a little bit more work. I have these tools here. They're called daily price movement ranges. They're not quite average true ranges, but it takes that into account with some volume, with some other things in terms of some historical price data. And so for me, once it gets further down in this range here, I know it's pretty exhausted. And then I also like, what did I just do? Let me go back. So this is the same here. This is an hourly chart here, just in terms of how my window setup is. And then this is a daily chart of the same name. And so these white ranges and yellow ranges are the same on both of these charts, but here it's like a little bit more zoomed in. So I like levels where volume is going to dry up, like right here, this 260 range. This is what I was looking at on Friday. And these volume candles are the volume over the last 20 days where people were buying or selling a lot. So for me, I'm starting to see the volume dry up at 260. So on Monday, these ranges might be a little bit different. So I want to look at whether this area is still there on Monday or if it's a little further down. If it's a little further down, then I might decide to get in toward the bottom of this white range, which is when I know the stock is going to be exhausted to the downside. And that's usually what I'm looking at. And then I'll go mark off that level. That level on Thursday or Friday was 260. In fact, I think I was looking at this on Thursday because I usually like it to be a little bit more exhausted. So I saw a decent volume dry up at 260, which means if a lot of people are selling, because there's less volume here, there's less sellers here, buyers or sellers. So I feel like at this point, there's not going to be a lot of people still driving down this stock. So that's where I want to get in. And for me, I kind of like stop hunt. Like that's where a lot of people are going to place their stop. People who have been in a trade on JP Morgan, if it comes down to 260, that's probably where they're going to be stopped out. And that's where I want to be buying, right? When all of the sellers are gone, that's where I want to be purchasing, and then ideally get all the way back up to here, sell some probably at this level, or a little bit higher at 270, sell some of my position, and then keep a few runners. That's generally my strategy, right? So if I were to say the same thing with Wells Fargo, uh, Wells Fargo's is a little bit in fact, it has a big level here. So on Wells Fargo next week, I want it to be more exhausted, not at like towards the top of this level. So I love like nice round numbers. So maybe it's 72. But I'll go look at this on Monday and go look at the price action, right? And or if you go take historical price data, right? Let's say on Wells Fargo, share my screen. WFC last 10 days. Wherever I think it's NASDAQ that isn't charging anymore. Because some people started charging. Oh, here it is. So if I download historical data, right here, and I'll go into ChatGPT, and then I pay for ChatGPT, and I assume Claude. I'm not sure what data you can throw in there, but I love with ChatGPT, or a lot of the paid versions, you can give it like a CSV sheet or an Excel file, and then I'll say calculate the average true range of WFC over the last 5 and 10 trading days expressed as a percentage and a dollar amount. And this is why I bought that tool that I'm using now, so that I don't have to do this every single time. But this gives me, so the average true range is about $1.47 or down 1.93%. And the 10-day average true range is $1.48, and it's pretty much damn near the same. So like, if so for me, what that means is, if I go to Wells Fargo, if I go to WFC, and let's say the closing price is 76.18, if that is down Monday 1.93%, like right on Friday it looks like it was up 0.78%, I don't want to buy this until it's down at least like 1.93, maybe even 2%, because that means it's exhausted. Because I just gave it some data, and over the last week and two, the average range of this stock, it doesn't go up or down more than 1.93%. So the best places to get in to the upside or to the downside would be when it's down 1.93% or up 1.93%. I'm not going to short it when it's up 1.93% because the trend is to the upside, right? Wells Fargo has been trending up. So if this comes down on Monday 1.93%, that's when I'm going to think about getting in. And usually what I've seen is these ranges, these white ranges I have, are approximately like, not exactly the true range, but approximately there. That tells me, hey, this thing has come down enough to be exhausted, right? On average, it doesn't drop more than this. So this is a good time to get into the stock, because I just calculated from a mathematical probability of what it's likely to drop to, and then stop, and then maybe start heading back up. You feel me?
Yeah, definitely. I got you.
So that's when I would do the same thing with. Let's do the same thing with like an Nvidia, like, which is on my list for next week. If I go to NASDAQ, go look for the last 30 days, download the historical data, go back to ChatGPT, use the same prompt. Y'all can steal my prompt. Right? And then you could even ask it like, and tell me how you calculated the ATR. Oh, crap. I forgot to upload the data. Right, and now like these are things that you would have had to done with had to have had done with a calculator or a spreadsheet or something, and try to get the and try to do this manually while the stock market's open. Now ChatGPT can do it in like a few seconds now, right? So for Nvidia, if Nvidia goes up $5.32 or down $5.32, that is approximately where I would try to get in. I usually take the more exhausted, the more like for here you see the 5 day ATR and 10 day ATR. There's a little bit more wiggle in this versus the last one, right? The 5 day ATR, the volatility was 3.93%, and the 10 day was 3.23%. So I'm usually going to take the most exhausted one, or the calculation where the stock has to go up more or down more, because that's a safer trade for me. It's, if it comes down even more, it's more exhausted and more likely to bounce up. So I'm going to probably take the larger number. This would probably, if you were trading in ranges and let's say you were getting in at specific levels, maybe if, let's say you wanted to buy 10 calls on NVIDIA, let's say nine, just to make it simpler. You wanted to buy nine calls on NVIDIA. If NVIDIA is down $4.38, you might buy three there. And then when it gets midway between this number and this number, you might buy another three there. And then when it gets down $5.32, you might average in and buy another three calls there, so that you got your risk spread out, right? You might want to trade your ATRs like that. Um, this is like over 1 week. Like, so this is like the volatility. If you're wondering what am I calculating, I am calculating the volatility of Nvidia over the last week, the last 5 trading days. 10 days is I'm calculating the volatility of Nvidia over the last 2 weeks, right? And I told you that my typical trading timeline is 2 days to about 3 weeks to 4 weeks. So I just want to see how volatile it's been over that time period to figure out, hey, if it drops this amount on a pullback, which is why I say my price is different every day, because this is like a daily volatility thing. So if Nvidia only goes down $2 on Monday, like I'm not gonna wait for it to drop another $3 on Tuesday. In fact, on Tuesday, I still wanted to go down $5.32 before I would get in. I wanted to be more exhausted for that day, right? Rather than looking for a particular level. At least that's how I've been trading. And so you don't necessarily need the dollar amount either. You can look at this percentage. So if Nvidia is down, I could set an alert for Monday that says, hey, if Nvidia is down more than 3.93%, or I would even make it more like 4%, let me know, because I know that's probably, and then I'm going to be looking at a level where volume dries up or where there's a lot of volume, potentially a lot of buyers to kick this back up to the upside. That's generally what I'm going to be doing. So same thing with NVIDIA. They said it was 3.93%. So I'm going to go look at NVIDIA. NVIDIA is at $135.40 in terms of the close on Friday. So if on Monday that is down 3.93%, that is when I am going to try and enter NVIDIA to the upside for a swing trade. And as you see, Monday or on Friday, it was up 0.42%. So if I'm looking at NVIDIA and I see, hey, it's down, it's red, it's down 3.5%, 3.6%, that is when I am going to start getting my trade ready. And then maybe even throw out some orders there just in case it comes down more. And bam, I'm into a trade at a level that I'm interested in being in, right? So if you didn't have these tools, or like essentially exhaustion tools, using the range or calculating the range of the stock or how volatile it is to figure out, hey, when is a good time to get in and when is a good time to get out, uh, and or if you're taking it to the upside, same thing. If you wanted to short Nvidia, which I would not recommend because it's trending higher and I don't go against trends, but if you wanted to short Nvidia on Monday, I would at least wait until it is up 3.93% to start shorting it.
Yeah,
You feel me?
yeah, definitely. No, yeah, cause and that's funny because with my Google trade, that's what I should have done. When it dipped down, I should have added more. But because of the market, I also was nervous. But I knew that that was the perfect time to add more because I should have trusted my trade.
Yeah. But so that's for me, it's just like calculations and like numbers. It's like, okay, we get to a certain percentage, it's down. This is a good entry. And yes, I could be wrong on my entry, and it could keep falling, could keep falling from 3.93% down to 5% or 6%. But statistically, that is improbable. So I will still take that trade even though I might lose because statistics were on my side. You know, it typically is not over the last week or two. Nvidia hasn't dropped more than 4% on one day. So if it gets down to around 4%, that is probably a good time to enter or to fade it and short it. You know, but
Right.
I wouldn't suggest shorting it because the trend is to the upside. So I want to move, and not just the trend on Nvidia, but I just showed you the whole sector is up. So I don't want to go against the whole sector and against the trend of a stock. So instead of fading this up 3.93%, I'm likely to take it if it drops 3.93%, hoping that it bounces there and continues its upside trend, which is the way the current is moving right now.
Gotcha.
Feel me? So on all of these stocks, that's what I'm doing. Go looking at the volatility of it, and when it gets to the edge of volatility and getting ready to bounce potentially back in the direction that it was already heading because we have a strong trend, that's when I want to get in. So for that, for Nvidia on Monday, it'll be probably somewhere in this white range. But this white range moves every single day because it is measuring daily volatility. So that's why I'll go look right before the market opens or right at when the market opens to see where this exhaustion range is on my chart, or go to ChatGPT and do what I just did to figure out what are some levels from a statistical standpoint that Nvidia or whatever stock I'm trading is likely to bounce at. And then the last thing I'll do is go look at the volume at those levels to figure out, hey, are there a lot of traders camping out at that level? And from a historical standpoint, are people buying, potentially going to buy there, or is liquidity drying up, which means all the sellers are going to be gone? And then I'm going to kind of use those levels and maybe some nice round numbers as a place that I might want to get in on my swing trade, you know. But yeah, and if we're just talking about like specifics, I'm just talking about entries right now. That is how I enter a trade. That is my trigger to get into a trade. Where I haven't talked about where I exit or scaling out or anything like that, but specifically entering a trade, which for most people, they figure that's the hard part. How do I know that I have a setup or when to get into a trade? That is my setup. And yeah, and then once I see all of these things are aligning together, I'll throw a couple of trades out there or a couple of orders, um, and see if they hit. And if they hit, then I have my stops. Usually on my options, it's 25%. I'll have a 25% alert stop on, but generally, I'm looking for that trend to continue after a stock is already exhausted.
Gotcha.
Yeah. But yeah, man, that's it. Unless you want to look at something else.
Now we good right now. We'll keep.
Yeah.
I'll be looking at that financial. Got some good gems right there too.
Yeah.
So
I told you, I really like the industrials because I feel like Uber and GE aren't really on people's radars, but like Uber look at that strong trend. For me, I have these trend tools too. Uber has had a
okay.
really strong trend, and GE has had a look at that trend. Looks better than WFC, the ones, and Nvidia. So I really
I
like,
feel like GE always does good when the market's bad.
yeah.
I always see that GE always jumps up.
Not necessarily. It's tied to the Dow a lot. But GE and Uber have been really strong, and I just like them because the average trader isn't trading GE and Uber, so it's not going to be as crowded as like Nvidia, you know. So that's why I think these are two of the top on my list next week are going to be Uber and GE.
Right.
Yeah. All right, that's it, folks. Mokama Sunday service, making it rain without the umbrellas, here every Sunday at 8 a.m. But yeah, until next time.
Good game.
Yeah, deuces. Peace.
Appreciate you, brother.
Yeah.